According to Zillow, the average price to buy a home decreased by 4.2% from last year, but that number could be on the rise due to the impact of the president's tariffs.
The markets clearly express some nervousness.
University of Texas at Austin assistant professor of accounting Andrew Belknap says the tariffs implemented by President Donald Trump could have long-lasting impacts when it comes to the housing market.
I think there is going to be a more long-term shock here, and prices will go up because we're going to be less productive than the places that we're currently importing from.
Zillow has just dropped a bombshell on the housing market. Their recent forecast slashed the expected growth for 2025 from 2.9% down to a mere 0.6%. This is an alarming reduction that suggests serious trouble ahead. Even more concerning is the prediction of actual price declines in 242 cities across America. This is not mere speculation. It is backed by Zillow's official data. This signals that a housing correction has begun. The post-pandemic housing boom is officially over. For years, we witnessed surging price growth driven by record low inventory and rock-bottom interest rates. Now, the market has fundamentally shifted. As of March 2025, 7 states, including Arizona, Colorado, Florida, Idaho, Tennessee, Texas, and Utah, have surpassed their pre-pandemic housing inventory levels. Listings are flooding the market at an alarming rate. The data suggests we are witnessing the early stages of a significant housing market correction. While this is not a full-scale crash, warning signs are flashing red, especially in regions where speculation ran rampant and prices became detached from economic fundamentals. This video will break down what Zillow's revised forecast means for homeowners, buyers, and investors. It will examine which cities face the steepest declines, identify the economic factors driving this shift, and provide actionable strategies for navigating the changing landscape. Whether you're considering buying, selling, or investing in real estate this year, understanding these dynamics could save you from making costly mistakes. The shift in Zillow's forecast. Back in January, Zillow projected a 2.9% home price growth for 2025. This was already a significant slowdown from previous years. Fast forward to March, and that forecast has been cut down to just 0.6%. This is effectively flat when accounting for margin of error. It's important to note that this is not the first downward revision. Zillow initially projected a 3.5% growth for 2025, before cutting it to 2.9% in January, and now down to 0.6%. This pattern of consecutive downward revisions is telling. It indicates that housing conditions are deteriorating faster than even Zillow's sophisticated models anticipated. Historically, Zillow has been one of the more optimistic forecasters in the housing space. When they predict near-zero growth nationally and actual price declines in hundreds of cities, it signals a major shift in market sentiment. Understanding the regional impact. The national average of 0.6% growth masks the severity of what's happening in specific regions. Some markets in the Northeast and Midwest may still see modest appreciation. However, Zillow is forecasting actual price declines in 242 cities. This represents nearly a quarter of all major housing markets in America facing deflation. For context, during the 2008 housing crisis, prices fell nationally by about 27% over several years. While the current situation isn't as severe, the regional concentration of projected declines is reminiscent of the early warning signs from 2006 and 2007. One of the most alarming aspects of Zillow's revised forecast is the speed of deterioration. Typically, housing markets move slowly with gradual shifts over many months or years. But the pace of this forecast revision, losing nearly 80% of projected growth in just 2 months, suggests a rapid change in market dynamics. Key factors driving the shift. The rapid shift in the housing market is driven by 3 key factors. First, rising inventory levels are creating a surplus of homes for sale. Second, declining affordability due to elevated mortgage rates is pushing potential buyers out of the market. Lastly, there has been a noticeable pullback in investor activity. Together, these forces create a liquidity trap in. Housing sellers need to sell, but buyers can't or won't pay the asking prices. This forces significant price adjustments. States at risk of price declines. Let's focus on the 5 states where Zillow's data shows the highest risk of significant price declines. These states include Texas, Florida, Colorado, Arizona, and Utah. All these states experienced dramatic price increases during the pandemic boom. Now they are facing a perfect storm of rising inventory and declining demand. In Texas, active housing inventory surged by 68% year over year as of March 2025. Cities like Austin, once a hotspot for pandemic migration, now have 3.8 months of housing supply. This is nearly double the 2 months considered balanced. In Dallas-Fort Worth, price cuts are occurring on 37% of all listings, up from just 12% a year ago. Florida's situation is equally concerning. Active listings across the state have increased by 74% compared to last year. In Miami, inventory is up 82%, while Tampa sees a staggering 91% increase. A collapse in investor demand has also been noted, with institutional purchases dropping 43% year over year. Colorado shows severe stress signals, particularly in Denver, where inventory has surpassed pre-pandemic levels by 12%. The median home in Denver now sits on the market for 38 days, compared to just 9 days during the 2021 peak. Arizona, specifically Phoenix, was ground zero for investor speculation during the pandemic. Now, Phoenix has 4.2 months of housing supply, doubling from 2 months in 2021. Finally, Utah's Salt Lake City is experiencing a 79% increase in active listings. Projected price declines in major cities. Now let's examine the 242 cities where Zillow is forecasting actual price declines. Some major metropolitan areas face steep projected drops. In the severe category, Austin, Texas is projected to decline by 7.2%. Boise, Idaho follows closely with a 6.8% decline, while Phoenix, Arizona sees a 6.3% drop. Las Vegas, Nevada is projected to decline by 5.9%, and Tampa, Florida by 5.4%. In the moderate decline category, we find Denver, Colorado at negative 4.7%, Salt Lake City, Utah at negative 4.5%, and Nashville, Tennessee at negative 4.2%. These markets are characterized by significant new construction activity flooding the market. The mild decline category includes Dallas, Texas at negative 2.9%, and Orlando, Florida at negative 2.7%. While these markets aren't facing the steepest declines, they represent some of the largest housing markets in America. The total equity impact will be substantial. Opportunities for buyers in 2025. If you're considering buying a home in 2025, Zillow's revised forecast presents both challenges and opportunities. Timing is becoming increasingly important. The data suggests that waiting 3 to 6 months could save you significant money in the 242 cities facing price declines. For example, if you're looking at a $500,000 home in Austin, with a projected 7.2% decline, waiting until the end of 2025 could potentially save you $36,000. Your negotiating position is also strengthening. In markets with rising inventory, sellers are losing leverage rapidly. The average seller in Phoenix is now accepting offers below asking price, compared to above asking during the 2021 peak. This shift gives buyers room to negotiate not only on price but also on contingencies, closing costs, and repair credits. The significant revision in Zillow's forecast from 2.9% to 0.6% growth, along with the projection of price declines in 242 cities, marks a fundamental shift in the housing market. 2008-style crash nationally, a targeted correction is underway, especially in states like Texas, Florida, Colorado, Arizona, and Utah. With rising inventory levels and changing buyer dynamics, this may create the first meaningful window of opportunity in years for buyers and investors alike. If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more. Understanding these dynamics is crucial. Whether you're a homeowner, a potential buyer, or an investor, it's essential to navigate this changing landscape with care. The era of speculative buying is over, and a more cautious approach is necessary. By adapting quickly and maintaining liquidity, you can thrive in this new environment. Want to learn more about investing? Like this video and subscribe to our YouTube channel for regular tips, tricks, and insights.